Welcome to ShortView Trading. This is your morning market hit for Wednesday, 23rd of September. What matters today for traders? Well, as we've been outlining to you in recent daily videos, most pullbacks consist of three waves. Occasionally it's a five wave, but most of them are a three-wave pullback. And those three waves play out as follows. An initial wave one of selling, then a relief rally in the wave two. Wave two retraces a small portion of the losses of wave one, and then a wave three of selling back to the intraday lows of wave one, or even lower, making new intraday local lows on a multi-week basis. And as you can see from the chart in front of you now, the S&P's followed that pattern quite nicely in recent weeks over the past month or so. There was an initial high around 2nd of September, then some wave one selling down to the 8th, 9th of September, a relief rally for a few trading sessions, and then renewed selling in the wave three that we've been seeing in the last sort of week or so. And as we've also been outlining to you in recent days, our risk appetite models are quite good at picking up the turning points between the wave 1 to 2 to 3. You can see the combined RAG 1 and RAG 2 chart up in front of you now, nicely giving sell and buy signals or close to them at the sort of peak and troughs of those three waves. And that RAG 1 and RAG 2 combined model used with other models gives us nice ability to pick turning points in this three-wave pullback. Now, what's intriguing, of course, is that our models are starting to get back to buy. As you see with the combined RAG 1 and RAG 2, we're back on buy. Other models have a similar message, whether it's a put to call or a technical scoring system or a breadth model. Most of them are back on buy or thereabouts. And intriguingly as well, we're starting to see key support levels. So if you look at the S&P 500 chart we're pulling up in front of you now, this is a broader time frame than the first S&P 500 chart we showed earlier. You can see on this chart though that there are two key support levels. The level we found, the lows we found intraday earlier this week on Monday. That support level was set up with the intraday June highs. Those highs now acting as support. That's what we saw in Monday's trading session. And then below that, if those levels fail, there's a support level around the 200-day moving average. So what's interesting is we've got a key support level, the initial one. We've got lots of buy signals, and it looks like, therefore, wave three may well have played out. Now, our risk here, of course, is that maybe we need to be on strong buy on the models, and maybe the support level's a bit lower. But I think what we can say is we're getting close to this pullback having played out, and therefore it's worth start trying to play the long side. It may be initially one fails on the first support level and one needs to pick it up at the second support level. Interestingly, the risk reward though is very much starting to favor the long side of this trade. For the full detail on how we're playing this, please see today's daily RAG, available to subscribers via the website. So what are we watching today? Well, lots more macro. There's flash PMIs that come out 2/3 of the way through the month. They give you the first take on global economic activity. This month, we've got those across the Eurozone. Today, later this morning. Then in the States, we've got MBA mortgage applications, always important, and some house price data. Elsewhere, we've got Jerome Powell once again testifying on the Hill, and a bunch of other Fed speakers out there as well. So that's it from us. That's your morning market hit for Wednesday, 23rd of September. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on Twitter, Facebook, and or LinkedIn. Thank you for listening. Stay safe. Trade well.